This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, April 7th, 2015. Euro dollar. So the euro has two levels that we need to watch right now. 110.53 above. That's the high that we saw last week on the 26th of March. And then we're looking at 107.13 below. That's the low that we saw on the 31st of March. A break above or below is going to be required for clear directional bias. At this point, is the market in the process of putting in a lower top at 110.53 ahead of a resumption of the underlying bearish downtrend, or is the market still looking to correct, putting in a higher low at 107.13 ahead of fresh upside beyond 110.15.3 and towards the 113 area further up? So that's the question right now. Are we going to continue this correction, or are we looking to resume the downtrend? And we're going to need to wait and see a break on either end for clearer directional insight. Sterling dollar. So cable has done a good job of being supported off recent multi-year lows at 146.35, but clearly, as you can see here with the chart, the downtrend remains firmly intact, and the market is poised for fresh downside should this continue below 146.35 and towards the 140 area further down. At this point, a break above 151.65 would take the immediate pressure off the downside, while only back above 155.50 would compromise the bearish outlook. Dollar yen. So dollar yen has been in the process of consolidating over the past several weeks. The market does retain a very strong bullish outlook given the resounding uptrend here. And after putting in recent highs this year, 7-year highs at 122.03, there is risk for fresh upside beyond 122.03 and towards the 125 to 130 area further up. But until then, we could see more consolidation, with setbacks expected to be very well supported into the 118 area, while only back below 115.55 would compromise the bullish outlook for dollar yen. Euro Swiss. So Euro Swiss had been in setback mode over the past several weeks since topping out at 108.15, but setbacks have been very well supported around the 104 area, with the market holding above 104 on a close basis and looking for a fresh upside now and recovery back towards that 108.15 high and above towards the 110.12 area further up. At this point, only a close below 104 would compromise and delay the recovery outlook for Euro Swiss. Aussie dollar. So Aussie dollar has been locked within a bearish downtrend, with the market now consolidating off recent lows at 75.60. There is room for additional upside in this market to correct within this consolidation towards the 78 area, but ultimately any rally should be very well capped ahead of 79.38, with only a break back above to compromise the bearish outlook. Dollar CAD. So dollar CAD has been locked in a bullish consolidation over the past several weeks, with the market well supported above 123.50. At this point, fresh upside is favored eventually above the recent 128.35 highs towards the 2009 peak at 130.65 further up. Only back below 123.50 would delay but not compromise the bullish outlook. Kiwi dollar. So Kiwi has been chopping around in recent trade, with the market rallying back up from lows that we saw at 71.76 all the way back towards 77. But ultimately, the downtrend remains firmly intact here, and a lower top is sought out ahead of a bearish resumption below 71.76 and towards the 65 area further down. At this point, only a break back above 78.90 would compromise the bearish outlook. SPX 500. So the S&P 500 has been showing signs of a major top in recent weeks after putting in a high at 2120, a record high at 2120 back in February. But the market is going to need to break below 2040 to confirm the prospect of this top and accelerate declines down towards and below 2000. At this point, rallies should continue to be very well capped ahead of 21, while only back above 2120 would negate and open the door for fresh record highs. Gold. So gold has done a really good job of recovering in recent weeks after stalling shy of that key 2014 base at 1131. The market traded just over that key resistance that we had talked about at 1223 the other day, but will need to close above 1223 to encourage the recovery prospects and the legitimacy of a longer term base. At this point, any setback should be very well supported ahead of 1178.